yes, BlackRock has the ability to obtain large amounts of Bitcoin very fast, and they can capture that value as well. And like I said, there are institutions potentially in the future that could exercise control by issuing a certain opinion, which could influence other people. So it's important that we are staying resistant to any institution. And Michael Saylor, when he came on the scene, because it just reminded me of what everybody is doing in the real estate industry anyway, and he was talking about Bitcoin being digital property. I'm thinking of it as digital real estate, and now that he's laying out his leverage playbook, that really helped me to understand Bitcoin as capital and its ability to function as a store of value for the 21st century. Hyper-Bitcoinization is actually not really going to happen. I think what's going to happen is Bitcoin is going to, but if you really think about it, a good savings tool doesn't need any cash flow. So Bitcoin's year-over-year return, and that is basically its increase in purchasing power, that's the cash flow on Bitcoin.
Mr. Leon Wankum, thank you so much for being a playable character in a sea of non-playable characters. Thank you for joining me today, sir.
Thanks for having me.
So for those of you who don't know, Leon he's spoken around the world over the last few years on Bitcoin, comes from the real estate industry, still in the real estate industry. And I feel Synergies is what we're going to talk about here today, that being my background as well. And so I think that I was just telling Leon off stage here that a couple of months ago, I was talking to Jeff Booth, and I asked Jeff, why are real estate guy, because Jeff was a real estate guy too, right? And it was in that world for a bit too, along with the tech side. So I was just asking, why are real estate investors not understanding Bitcoin? Why are they not seeing the Saylor playbook in a way? And now that's being unveiled to the world in a way, and people are their minds are blown. But that's been a thing that real estate investors, this playbook has been used for a long time. And Jeff's big thing was, it's really these 4-year cycles that, real estate investors are used to the cash flow, right? They're used to the rents coming in, and they can weather that volatility of maybe the market going up and down, or being able to pay off that debt each month that they have to pay when they're lending or using other people's money. So that's where I want to take this with you today, Leon. We were talking, I think this is something that people are just beginning to have their eyes open to, and real estate investors, it's right there for people to see. So I would love for you to give us your thoughts on this and where the world is headed when it comes to the Saylor side meeting the real estate side.
Mm-hmm. Yes. Yeah. Thank you. It's a very interesting question. I think about it a lot. Because personally, coming from real estate development and being in real estate development, I always ask myself, why do people in real estate development don't see what we Bitcoiners see? And I think there are various reasons. One is the reason that you just mentioned, the reliance and being accustomed to cash flow, and also the low interest rate environment. Because when you look at the interest rates from 2008 until basically November 2021, they were extremely low. There was a lot of liquidity coming into the market, and a lot of that was funneled into Bitcoin. And that was basically the time frame from 2009 till 2021, when Bitcoin went through its first 3 bull markets. And real estate investors, I think, they were busy making money with real estate due to monetary debasement that caused people to invest heavily into real estate. And real estate is also used as collateral in the financial system. So banks are, central banks, commercial banks, they're interested in propping up the property market because they themselves and pension funds hold real estate, and they also lend against that real estate. So it's a source of liquidity for the market. And with quantitative easing and also with treasury buybacks, a lot of capital was invested in real estate. But if you think about what Saylor is actually doing, he's doing what real estate investors have been doing anyway, because for a company, you can raise revenues, you can cut costs, or you can leverage your balance sheet. That's like the third level of growth for a company. And that's what real estate investors have been doing all along. And Michael Saylor, when he came on the scene, I was fascinated by his playbook, because it just reminded me of what everybody is doing in the real estate industry anyway. And he was talking about Bitcoin being digital property. And I thought, well, I'm thinking of it as digital real estate. And now that he's laying out his leverage playbook, that really helped me to understand Bitcoin as capital and its ability to function as a store of value for the 21st century and beyond, really, for this digital, the digital time that we're moving in. So being a real estate developer, or being a real estate investor, that really caught my attention. And then I started to think myself, how could we copy basically what Michael Saylor is doing? How could we apply it to an existing real estate portfolio? It's obviously not as easy, because it really depends. I mean, if you fully paid back the debt that was incurred to build properties, you can lay out and play out Saylor's leverage playbook pretty well. But we are a pretty young real estate development company. So the properties that we own, they are actually heavily indebted. And also the company, so the reason why I'm saying that is, if a company owns properties that aren't indebted, you can't refinance those properties. Because the obvious thing that came to my mind when I saw what Michael Saylor was doing, I was like, guys, we need to refinance our existing real estate portfolio, take the additional equity that we can get, and buy Bitcoin. But the problem with that was we weren't able to refinance the properties, also because interest rates rose. Because there's also an interest rate sensitivity with real estate. Saylor is actually able to get cheap money in public markets, because he's the CEO of a successful publicly traded company. And for a privately held real estate company, it's not as easy to raise money. And there's also a higher interest rate sensitivity, but that shouldn't discourage anyone from doing it.
Yeah, absolutely. We were talking offline, and it is simple. Like, the rates are a little different. Being a publicly traded company makes it a little different, and raising with other people's money, going to put that to work, buying a property, fixing it up, and then renting it out, refinancing, and pulling all that money back out and giving it back to the partners you have, and those cash flows. I mean, that's infinite return. So people talk about the CAGR of Bitcoin being 50% or 150%, and in real estate it can be infinite, right? You have no money in a deal, and those cash flows, like you said, you mentioned Gary Cardone's been talking about that too. Grant Cardone, they're starting to kind of see that world where you can have this asset you acquired with none of your own money. You put the work in, you take that, and then you dump that into Bitcoin, and you're multiplying your wealth hand over fist. So it's really incredible. It makes me think of, I think the guy, did you see the guy recently in, I think it's New Jersey. I think they're based in New Jersey maybe, but it's Battery Finance. Andrew Hones, I think, is the CEO. And they were talking about doing lending or putting it on the balance sheet. I can't remember exactly what I saw a clip of it, but did you see that?
Yeah. Yes. Yeah, I saw that. I've met Andrew as well. And what he's basically doing is he's allowing people to refinance their real estate. So let's suggest you own property that's worth 10 million and you have 8 million debt on it. Or you took 8 million debt to construct it and then you rented it out, and now it's fully leased, and over time it increases in value with monetary debasement. And obviously you pay back the debt over time. And at some point in the future, the value of the property and the debt, they will have changed, right? LTV goes down over time as the value of the property increases and the debt is being paid back. So what you can do after a while, you refinance the property and you take on additional debt. And that's the product that they offer. So they offer real estate investors the ability to refinance their real estate properties and buy Bitcoin with that additional capital. And then I think it's being held either by a custodian or in a multi-sig. I'm not aware of the details, but I think it's actually a great product, especially if you can yourself, as the real estate investor, as the landlord, if you take possession of the Bitcoin. So generally speaking, I think with Bitcoin, what I personally like about Bitcoin is its ability to be self-custodied, right? I think it ties into it being tamper-proof, because no centralized institution can control its supply. So holding Bitcoin and knowing that it cannot be inflated, I think that's the value proposition that I like the most. So if you do want to refinance the properties that you own, make sure that you somehow keep possession of the asset, either through shared custody or legally speaking, right? If you can maintain ownership legally speaking. I think that's very important. And you also mentioned what the Cardone brothers are doing, or what Gary Cardone is doing. I don't know him personally, but I've been following it on Twitter, and I think it's a smart move. If you think about the cash flow that real estate produces, it's very obvious that Bitcoin is a good reservoir for that capital, and that's like the first step, right? So the first step is, I think, acknowledging that Bitcoin is a good place to store the cash flow that your company or an asset that you own produces. It's actually the same for a startup or for any existing company. And I think then the next step is, how do you incorporate Bitcoin into the refinancing of an existing asset? Because that's what Michael Saylor has done so well with a publicly traded company. And now those individuals that own tangible assets like real estate, they can copy the strategy. And another thing that I'm very interested in, that I'm focusing on right now, is the ability to obtain additional capital to buy Bitcoin when receiving financing. And I maybe quickly explain what
I'm
I
just going to
mean.
ask you that. Yeah.
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 So let's say there's a real estate project and it's going to cost 10 million to construct, and you get financing from the bank, let's say 80%, 8 million, and you bring 2 million, 20% in equity. What you could do, and it's not going to be easy to find a bank that understands why you asked that question, but with time, there will be more banks that understand the value proposition of giving out loans to buy Bitcoin. Ideally, what I would do is, you get 9 million from the bank. So you get an additional million. And with that money, you buy Bitcoin immediately before you start construction, right? So by doing that, you are hedging yourself against multiple scenarios. Number one, you hedge yourself against a world in which people prefer saving in Bitcoin than investing in real estate, because that would mean that the money that sits in real estate right now, because it is used as an investment to hedge against inflation, would flow into Bitcoin over time. So you hedge yourself against that. That is something that a Bitcoiner understands easily. But number two, you hedge yourself against inflation, because over time, as you construct a property, with monetary debasement and with shortages due to geopolitical conflicts that are also often caused by the fiat system, the cost of producing a home, of producing a property goes up. Material goes up, the cost of labor goes up. So by owning Bitcoin, you have an asset in the company that holds and constructs the property that increases in purchasing power over time. Because if you think about it, it takes around 5 years to construct a property on average. And if you think about the halving cycles that you talked about at the beginning in Bitcoin, they take around 4 years. So on average, if you take a 5-year span, Bitcoin you purchased in year one will be worth more after year 5. So you hedge yourself against inflation happening within the economy, and also you increase your ability to obtain credit over time. Because Bitcoin in theory is pristine collateral for lending. It is not accepted as such by TradFi yet, but there are some companies in the Bitcoin space that are coming up, and I think they will provide enough liquidity to use Bitcoin to lend against. And that means if you're a real estate development company, you start a project, you obtain extra capital to buy Bitcoin, you hold that Bitcoin long term. Once you finish construction, you can theoretically also lend against your Bitcoin and fund maintenance, or you could actually pay back debt, or you could buy more Bitcoin. But using Bitcoin at the beginning of a project already introduces this new form of capital into a company structure that allows you to maneuver completely differently. And I think this is not just true for real estate development, this is true for any company. I think it's almost not worth initiating a real estate project or starting a company without allocating capital to Bitcoin at the beginning of the venture to be able to maneuver better, because Bitcoin is this pristine capital, it's a great store of value, it's pristine collateral for lending, and it allows you to just move different.
I couldn't agree more, Leon. That it makes me think of. I know I've talked to some people, and I've thought of many times over the last few years where you're trying to square the circle of, why am I investing in real estate in a way? Why don't I just put all of my time and effort into Bitcoin and just keep investing in Bitcoin? And I think the answer would be from you or, seasoned real estate people would be, well, hey, you can use this to really leverage and amplify the assets that you hold. You can use this to buy even and acquire even more Bitcoin as time goes on. And that, like you were just saying, you put it so well, that those 5 to 10 year cycles, even, I mean, again, someone building a 5 to 10 year project, they don't come around very often. Obviously, it's going to be, huge companies, big pools of capital, but at the end of the day, we know that those are the people that move markets. So that's where I think that, like you said, you can kind of kill 2 birds with 1 stone with, hey, let's put some Bitcoin on the balance sheet right away, right when we're raising the capital. That is massive. And I think that's really going to change things. It makes me think of also, I don't know where you're at, what the tax laws are here, but are there. But, Trump, obviously there's many things that they've been bantered about over the last few months, but even like the 1031 law or a rule going away here potentially, right? And people could sell their real estate for, or vice versa. I don't even know how it'll work, whether you can go in and out of Bitcoin back and forth. They're both classified as property without tax consequences. It's fascinating what's happening. What do you guys deal with when it comes to the tax stuff? Like, what do you foresee when it comes to some of these, I don't know, inefficiencies, these things we've kind of had, the antiquated laws in the books? Like, how do you kind of foresee getting away? Because I think it lends into the question, or leads into this hyper Bitcoinization world where we're trying to live in both worlds too. But eventually, I think most of us believe at some point, it might be ways out, but Bitcoin will be it'll be everything, and we won't have some of these other currencies that we're dealing with. So how do you kind of see this, whether it's the taxes or, using the multiple currencies and, fiat versus Bitcoin at the same time?
If you're liking this interview, but you're just wondering, you know what, Brandon, this is amazing stuff. And I get you have these guests on and they're talking about how orange pilling the world is so great and how Bitcoin is going to take over the world. How in the world do I educate my family and friends? How do I get people to understand what most people just don't care about, quite honestly? Bitcoin trading cards is the way to do that. When you open up these cards, you see the foil cards, you see the chase, you see the glossy cards, young, old, boy, girl, man, woman, it doesn't matter. People love these cards. It's awesome because they're super valuable, by the way. Amazing little side note. However, it Trojan horses them into the most important thing of the day. It's not politics. It's not all the things that we fight about. It's changing the money, fix the world. Bitcoin trading cards is the best way that we have going in order to do that, no matter who you are. You're going to love them. Playable Characters 10 for 10% off at checkout. Playable Characters 10 off at checkout. btc-tc.com. You're going to absolutely love these things. Now back to the show.
So I'm not an expert on US tax laws or the application. I have to be honest, I'm more familiar with Germany in particular and Europe, but obviously I talk with friends in the US, and what you basically described, the ability to refinance real estate and then roll that over tax-free into a new project, ideally that would be possible with Bitcoin also. So you, for example, let's say you are a real estate investment company, a real estate investment business, I think you would do well refinancing your existing assets and converting that capital into Bitcoin. If you can do it tax-free, that's even better. In Germany, you actually can, because if you hold Bitcoin for longer than a year, the gains are tax-free. And because I believe Bitcoin should not be sold anyway, if you just hold it long-term, there's no taxable event. The question is, if you start, trading it, and if you do options, then it's a commercial activity in Germany, and that commercial activity would change one fact. And the fact is the following: if you hold real estate in Germany, after 10 years, you can sell it tax-free, but you can only do so if it's not deemed a commercial activity. If you just hold the asset, if it's simple wealth management or holding of an asset. But if you start buying Bitcoin with the rental income and then you start trading it or selling it and then buying it back, it will be deemed a commercial activity. So you just need to hold it. But you do it, I think, with real estate anyway. So it's something that naturally should be understood by real estate investors. It's an asset to be held, ideally forever. And to also comment on what you said, that sometimes, working in the world of real estate, if you're also into Bitcoin, you think to yourself, why I don't just invest any penny into Bitcoin? And I think it's a good point, because saving in Bitcoin is much easier. It takes less effort than investing into real estate. And the CAGR, so the compound annual growth rate of Bitcoin, is actually larger than the average return of real estate, even if you calculate that there's leverage involved. Because let's say you have a 5% leverage, you have 5% return in real estate, and let's say you have a leverage of 5 or 6, your return is actually 25 to 30%. And then, like you said, if you do it with money that was given to you and you invest that capital, it's not even your own capital. So it's almost like you're making a killing without putting in any money. But once you understand that this dynamic itself is actually part of the fiat system, that's the Cantillon effect, that over time causes boom and bust cycles because so much capital is funneled into real estate that it can never reach its realistic price. So there's a distorted price signal within the real estate market, and over time, because real estate is then sold in a secondary market, or the mortgages are sold on the secondary market. And in '08, we really saw where you had assets that were overpriced, and then the mortgages were bundled and were sold on the secondary market and even then resold. And that can create systematic risk. So I think if you do real estate, look to put in some of your own equity and also use it to buy Bitcoin. Always own the assets that you're involved with. That's at least my opinion. I mean, there are different opinions. It's just a personal opinion of mine also as a Bitcoiner. I started to see also the fallacies of the industry, not criticizing anything because I'm in the industry still myself, just some self-reflection that I'm going through. And I do believe that the speculation that is happening in real estate, that will move over to Bitcoin, and Bitcoin can be saved much easier, but real estate will always continue to be an interesting business model. And it's also totally fine to conduct business with money that you obtain through credit. So if you're a Bitcoin purist and you dislike real estate because it's built on leverage, I personally believe in a fiat world where money loses value so rapidly, you actually need to obtain credit to conduct a business, because otherwise you have to risk all your savings. And savings are basically a hedge against bad decisions in the future. So it's very important to have savings. So that's why I can live. Some people actually ask me sometimes, Leon, what do you think? You work in a world of real estate. You're also a Bitcoiner. How can you combine these two asset classes? And I think we are all on our individual journeys. And through Bitcoin, we sometimes also understand flaws of the existing system. But I think it's important that we work on solutions where we combine and help the systems to be intertwined, because otherwise we'll just experience a huge crash. And because real estate is such an important collateral in the financial system, I think it's important that real estate owners start to own Bitcoin, because it's also a hedge against any systematic risk in the financial system that they are exposed to by owning Bitcoin, which as an asset class has become such important collateral in the financial system. So if you own real estate, I think you should really look at it as a Bitcoin mine. What I mean with that is, now you own an asset that allows you to acquire Bitcoin, potentially through leverage on a large scale. So that's a very big chance.
Yeah, I couldn't agree more. I think it's, and you made a great point too, it's important to differentiate in a way. There's so many ways to do real estate. And I would imagine the average person, at least here in America, like you said, they're getting a mortgage on a house, and they think of that as real estate. It's just the average person, right? And that's what they're doing here in America, at least. And Leon and I are kind of talking to separate things in a way. And from what I'm sure the average person is thinking, investment, the side of things, is where you're raising money. Technically you're raising money from a mortgage lender here in America just to buy your own home. And to your point, Leon, I think or even if you're buying a single family rental house and you're getting a mortgage and you're putting 20% down, and like you said, Bitcoin beats those CAGRs, those compound annual growth rates, hand over fist. Now, when you start introducing higher leverage, say you're raising all the money and then you're going in and rehabbing the whole place and then refinancing and pulling out all the money that was invested, maybe more. You might have put a 500 grand in, and maybe we refinanced it for 600 grand, and you pulled out even more than the property than you put into the property. So again, those are infinite returns where you can use these vehicles, and it's not for everybody. And that's where like the big pools of capital are going to be doing things like that potentially. And then the average person is going to be doing something differently too. So I know I wanted to try to clarify just for the average person, because I'm sure what you and I are talking about at times kind of seems like, okay, where are we and where are they going as we go down the rabbit hole here and there. But so I wanted to mention that. And then I was also thinking of, we talked a little bit about just earnings. I'd love for you to talk about the business cycle just a little bit more. And you touched on it a little bit already, but one of the big objections obviously is Bitcoin doesn't produce anything, right? There's no earnings, there's no cash flow. Have you thought about that in terms of real estate? Is it just extending out your time horizon, a few more years? Are there ways that you guys have thought of to start generating a return on it, I guess, so to speak? I mean, are there ways that you've kind of gone about thinking, hey, these are some creative ways we can do it, a la the Saylor playbook and what's happening there? Obviously, like you said, I think the big innovation is you have to start infusing. The market in general saw Bitcoin for 15 years as, hey, it's a separate asset class. We don't really know what it is. Is it property? Is it money? We have no idea. And now we're starting to see the first inning basically of, oh, this is something that's going to be infused and disrupt all the models, disrupt all the legacy stuff, but it's also being infused with the legacy stuff at the same time as it's kind of breaking all of it. So have you looked into or thought of just different creative ways to satisfy or quench the thirst, I guess, of some people who are, it doesn't produce earnings, it doesn't produce cash flow? Or is it just the fact that, hey, we're intertwining it with real estate that produces a return? I mean, I guess, how have you been looking at that recently?
Yeah, so I think the reason why most people want cash flow is because they're used to money losing value. So they want cash flow or yearly return to outperform inflation.
Yeah.
And then a lot of the assets we own, they're bought on debt. So you want cash flow to pay back the debt, right? But if you really think about it, a good savings tool doesn't need any cash flow. So Bitcoin's year-over-year return and that is basically its increase in purchasing power. That's the cash flow on Bitcoin. So using it as an analogy, meaning of course it's not cash flow, but that's the return you get. It's the scarcest asset in the universe known to mankind, and it compounds over the years in purchasing power because we are being more productive and there's more fiat currency produced that is looking for a scarce asset, right? So you don't need cash flow on Bitcoin. It's very difficult for real estate investors to understand that. And how I usually explain it is, you should think about it like this. Real estate has become so valuable not because of its cash flow, but because it is used as money. It is actually one, of the most used forms of money of human civilization since 1971, because what happened in 1971 was that Richard Nixon announced that the US would end the convertibility of the dollar into gold at a fixed rate. And that caused massive monetary debasement worldwide. And you can really look at the chart of the value of real estate worldwide, and you can see from that point onwards, real estate almost moves online with the increase in the monetary supply, especially in the US. So in the US, we looked at the CAGR, the compound annual growth rate for M2, the money supply, and that was around 6.8%, and commercial real estate was 4.4%, and residential 5.7%. So you can see that real estate follows the money supplies because it is used as a store of value. It is used as money. Money should be a store of value. Fiat money is not, because it's being debased, right? So if you understand that real estate has become so valuable, not because of its cash flow, but because it is used as money, you understand that the cash flow is only important because that is obtained to build and purchase real estate, right? So, but it doesn't mean it's a good store of value. And then the argument of a real estate developer would be, okay, well, but I can't buy Bitcoin on leverage, right? And I say, that's true. If you're a real estate professional if you're a real estate professional, like you said, that's different from being an average investor. With an average investor, I mean somebody that wants to save, because Bitcoin is not an investment, it's money that can be saved, where real estate is an investment. It's also a very important distinction to make. So it's much easier to just save in Bitcoin rather than having to invest in real estate if you just want to build wealth, save money. If you are in a real estate business anyway, because you like the building environment, you think it's important to provide housing to the market, you enjoy constructing commercial or residential properties, then I simply suggest do that, but amplify your business model by including Bitcoin in financing, using it to save the purchasing power of your cash flow and refinance your property. Because then think about that. If you buy Bitcoin on leverage, those returns, they are really crazy. And that's what Saylor is basically showing to the world. And if you own real estate, if you own an income producing asset that's fully leased, right, that is great collateral to obtain credit to buy Bitcoin, because Bitcoin does not produce cash flow. So you can't, right? You can't use it to pay back debt. You can sell it, but you don't want to sell it. So you use real estate, you buy Bitcoin, the volatility becomes secondary because you can pay back the debt with the cash flow of the property. So now you combine both asset classes, you do it from the beginning, you do it while managing the asset, and then as time continues, you increase your BTC position through leverage. And by doing that, the business will become even more interesting, and you can compete actually also with other market participants much, much better.
So fascinating. I feel like there's going to be a couple big real estate companies or just groups of people that really start exploiting this in the next year or two and just start taking off. It just feels like it's got to happen sooner or later. People kind of see that. Yeah. It has to. I just, like you said, I mean, it's so simplistic. Again, it just sounds, it's just too easy at times, right? Humans, we try to make things so difficult, but it's like, if you're holding Bitcoin and that's growing, and in the real estate in the same thing, and you're leveraging both at the same time, and this one's feeding, they're feeding each other. And then, yeah, it's almost hard to comprehend at times. Man, it's absolutely wild.
And it totally is. What I find really interesting also, just like looking at the sidelines, you don't even have to have an opinion, but it's very interesting to see how Bitcoin finds its way into traditional asset classes and into financing and lending models. And it's just this, yes. It's crazy. I mean, you can't fight it, it's finding its way somehow, either through the debt market, by being included into loan products. I find it fascinating, and potentially it happens actually quicker than I thought initially. And there is a chance here that we can actually prevent societal collapse, because every 80 to 120 years, we do have some form of societal collapse occurring globally. And potentially now, because of Bitcoin, which can act as this cushion that helps to prevent societal collapse, we don't necessarily need to go to societal collapse to reach the next level of human consciousness. And that is beautiful.
It truly is. At times, you don't want to wish life away. At the same time, you see all the things that can be in the future, and it's just, geez, how are we not there yet? And it'll just be so fun to kind of see some of these things play out. And again, it makes me think of just returning the system. You mentioned something to the effect of, again, returning the system. Oh, it was how, money shouldn't be a yielding product at the end of the day, right? People are into real estate or some of these things because they use them as money. And because the currency is collapsing, people have just accepted this as it's just a natural way the world works, apparently. And it's all everyone's grown up with. So, hey, we need this yield. We need this return, interest in our bank account, or cash flow from a rental property in order to try to sustain or just keep us afloat, in essence. So Bitcoin doing that, again, obviously, like you said, turns everything on its head, which is, again, it's a seismic shift. So it's humans kind of flipping everything upside down. It's intuitive once you get it. Unfortunately, it's not intuitive yet for most people because they haven't grown up that way, but they will. So, which is great. So it makes me think of even basic stuff. Have you guys done just like closings, right? They're just a closing. I remember one of the last brokerage closings I had helping someone sell. It took like 2 months and just to get funding because there were so many issues with, the Fed wire here and the banking system and their investment account. And it was just it's such a hodgepodge of things that have to come together. And the whole time I was just sitting there like, wow, this would have been done in 10 minutes or I mean, heck, we could have done it in the Lightning Network, or it's would have been done in 10 minutes or an hour with Bitcoin final settlement. So how far down the rabbit hole have you been going? Just, we're in the macro of just like the heady world of where, the macro environment will take us with real estate, but also just the actual logistics of real estate and how much Bitcoin or the rails of Bitcoin will help real estate. How far have you dove down that rabbit hole?
Yeah, so we have great partners, I have to be honest. The financial institutions that we work with and also the partners that we work with when it comes to construction are mostly great. But obviously, the business isn't easy. There are a lot of problems you need to solve. It's basically continuous problem solving. And what I'm thinking about a lot is actually when we sell an asset, with an asset, I mean, when we sell a property, on the buyer side, it's often a pension fund or another institution that has a high cash flow and they want to place their cash flow in an inflation hedge. So it's actually, let's say it's a MicroStrategy like company. So what I mean by saying that, it's a company that runs a successful business and they have cash flow they need to invest. And they choose real estate for doing that. And I obviously, on the seller side, if I know the property that I own is well managed, it's fully leased, it's modern, I can happily sell it because I think the market price is justified given the conditions. But then sometimes I wonder, it would be so much easier for these people to just buy Bitcoin, because this whole process takes 6 months. It costs between 2.5 to 7% of the deal price, goes for notaries, lawyers, municipalities, and then also the maintenance of the asset is so extremely expensive. And if you just want to place large sums of capital in particular, so companies that make a lot of money, pension funds, you could just place that in Bitcoin. And I think a lot about the efficiencies that would create. I mean, imagine they would have an infrastructure where they funnel their monthly surplus into Bitcoin. They either hold it in multisig, in self-custody, or they use companies. There are companies that recently came up, like OnRamp, where they have geographic key distribution. So you have a key in different jurisdictions around the world. That is a system that works well with publicly traded companies or privately held companies with multiple stakeholders that trust such a system more than self-custody, because self-custody for a company can involve regulatory risk. So I think if you would think about that, they funnel their money monthly into Bitcoin. It's being held in a secure way. It's highly liquid. So if they want to sell it, they can sell it. And if they want to lend against it, they can lend against it. Because if you want to lend against real estate, you also have to appraise it. So let's say I'm a pension fund or I'm a successful company that sells any type of product, you name it, and I have money I want to invest on a year-by-year basis or month-by-month basis. If I want to do it with Bitcoin, I can do it every month. If I want to do it with real estate, I also have to wait till I have enough money to buy a specific asset, but maybe over time it has increased in price, where Bitcoin is divisible and much more accessible for that reason. So it allows the CFO of a company also to place capital faster and more efficiently. And if you want to sell the asset, you can. And if you own real estate and you want to obtain credit, it takes 3 months until you get the loan, because over time the asset changes in its structure, meaning maybe somebody wants to take a look at the asset again. Is it maintained well? Is the property maintained well? Maybe the individual at the bank you worked with left the job. Now there's a new person. They need to understand the rental income. They need to understand who lives in that building. They want to understand where the building is placed geographically. So that really takes a lot of time. And with Bitcoin, and we have been using it also in our company structure, we have been placing some Bitcoin as collateral to obtain loans. And it took us literally 3 hours, whereas it takes 3 months to get a loan against real estate. So I think that also helps to understand that Bitcoin as an asset is superior to real estate in its functionality as a store of value and as collateral, because it's a digital asset by design, and it's a monetary technology that is highly liquid, and its frequency is so much higher than real estate. And if you think about it, that we live in a highly digitalized world, but our capital is locked up, illiquid, intangible goods. It doesn't really make sense. So sometimes when I walk around and I see buildings and I think about how much capital is illiquidly locked up in those tangible objects, I think there's a mismatch between us living in a digital world. Mostly, I think there's around 5 billion internet users. So that is obviously, that's like more than half of the world are using the internet now and have access to the internet. So why is the capital locked up in illiquid tangible objects that are not accessible to the market? There's a mismatch here.
It makes me think of one of your, I'm trying to think. I think it was one of your talks you gave on stage. I don't know where it was now exactly. I mean, you've talked about this numerous times, but I think one of the most important things for just the average person, regardless of real estate or whatever it is this intrinsic value. I would love for you to explain just intrinsic value, and you laid out so beautifully on how people think it's this objective thing when really intrinsic value is subjective, and people get so caught up in this world, and you get a lot of the Warren Buffett acolytes and all these different people, like it's just, and they have all of their opinions on it, when in reality it's like if you just zoomed out and like paused and took a breath for a second, you'd realize, again, this is very common sense. So I'd love you to kind of break down the intrinsic, subjective versus objective here with the intrinsic value.
Yes, because it's true. It's an argument that real estate investors use a lot, or it's a question that's being asked. Sometimes it's being asked in a certain way where you understand it's actually almost like an insult or some form of aggression.
Gold people do it. Yeah, gold bugs, everyone, real estate guys. It's like, yeah.
Exactly. So it's like Bitcoin has no intrinsic value, right? That's like the comment I see a lot in LinkedIn, especially. Sometimes, not sometimes. I have a monthly newsletter, and I post it on LinkedIn as well.
Leon, really quick, by the way, I just saw a thing about LinkedIn. You just made me think of this. And it was like, I don't know who posted this. It was someone on Bitcoin Twitter. And they're like, if you know what LinkedIn is, or if you use LinkedIn, you don't have enough Bitcoin. And I just was like dying laughing, because it's like it's real estate. Like real estate is notorious again for like LinkedIn and all this stuff too. And like we come from those worlds. So, but like I saw that on Bitcoin Twitter and I was just dying laughing. I was like, only this little circle of people, like real estate Bitcoiners, would understand or like get it in a way, or not just that, but like I just found it hilarious. Anyway, I
saw it as well, by the way. Made me laugh.
Did you?
Made me laugh. So I post my newsletter like once a month on LinkedIn, and then sometimes people say, "Oh, but Bitcoin has no intrinsic value," right? So, and I wrote a newsletter about that as well, and I called it, I think, debunking the cash flow narrative. And
I love that.
It was fun actually to write. So I take reference to Karl Menger, and Karl Menger was an Austrian economist. And I think it's actually very important because in 1871 he wrote a book called Principles of Economics, and then he had 3 students. So Friedrich von Wieser, Eugen Böhm von Barwerk, and Ludwig von Mises. And why are these three people so important? Because they were basically the founding fathers of the Austrian School of Economics. And I think the cypherpunks, most of them, they were discussing Austrian economics a lot. Nick Szabo takes reference to it, Helfreni does, and Satoshi in some of his emails as well. So what Karl Menger basically described was that there is no intrinsic value. There's only subjective value. And I want to give an example that I think works quite well. It's the example of a Rolex watch. So it is true that gold is being used in production, predominantly, by the way, for jewelry, which is being worn because gold is scarce, not because it's such a good material, which also shows it's a bad argument of gold bugs to say gold is being used in production or in the industry, because it actually predominantly is being used to make jewelry. But that jewelry, right, the Rolex watch, is not so valuable because of the gold, or because of the production that went into it. That's part of the cost or of the price, but it's because somebody's willing to pay a lot of it for it. And another good example is art. It's totally subjective, and that's the reason why Bitcoin has no intrinsic value, because nothing has intrinsic value. And it's also important that good money is being used for no other reason than being used as money. It's the same with gold. So it is true, there is the regression theorem that says some value must have been attached to a type of money before it was money for it to become money. And with gold, that was the case because it was used for jewelry. But gold specifically is such good money because it is used for nothing else than its purpose of being money, meaning it's a good store of value, good medium of exchange, and a good unit of account, right? So Bitcoin has no intrinsic value like gold, and real estate have no intrinsic value. Intrinsic value does not exist. Value is totally subjective. And the reason why Bitcoin has become so valuable is because it is so secure, and it's a network that allows people to securely store their value. And that is the value proposition of Bitcoin. The value proposition of Bitcoin, I mean, there are many, the separation of money and state being the predominant one, but that includes a network that allows you to store value because it is secure, because of all the energy that's being fed into the network. It cannot be controlled by a single entity. That's how Satoshi Nakamoto solved the Byzantine generals problem. And that's because Bitcoin is so valuable.
Oh, so well said. What's your, and just so we can, if there's someone watching that hasn't, they're not too far down the rabbit hole of Bitcoin in general yet, and seeing this world as, we're so used to this Keynesian world, like you just mentioned, the Austrian school, obviously, but yet so many of us, really the world for the last 100+ years, have been in this real Keynesian school of economics that's upside down. What was your orange pill moment? Like for me, some of the biggest things that I was telling you, 7 years ago when I started buying was seeing the log chart of Bitcoin and network effect. And then, like you said, understanding really what money was, what it always had been and what it was. And then, being able to store wealth in your head, again, being a real estate guy, it was like, well, yeah, we have these buildings, we can't move those. But if I have 12 words or 24 words, I can literally go to where Leon is, or I can come back to America, or I can go anywhere with wealth in my head. So what were some of those moments for you that really got you to cross the chasm and kind of flip the switch on for you?
Actually, my introduction on Bitcoin was more based around it being a censorship-resistant payment network. So when I was introduced to Bitcoin, I mean, that was more early on in Bitcoin's life. So Bitcoin existed for a few years, and it was discussed. I was studying philosophy and ethics at the time, and Bitcoin was just discussed among the student body because of, you had WikiLeaks, you had Silk Road, so you had different use cases for this currency, and people were talking about it, and I just caught on to it. And then I was seeing somebody using it. I was seeing somebody sending money across the globe. I was standing behind them, and I actually vividly remember this moment. I was like, wow, because I was thinking all the time, why is there no native currency in the internet? And if you also look at the HTTP protocol, it was designed with a currency to be implemented later on. But because the double spending problem wasn't solved, that never happened. So I always ask myself, actually in my teens already, why is there no currency in the internet? So when I saw Bitcoin, when I saw somebody using it, I was like, cool, there's an internet currency. And he said to me, it's an internet currency from China. So I didn't even ask, that was my introduction. And then 3 years later, I studied financial economics, and I wanted to write my master's thesis about Bitcoin because I started reading about the cypherpunks, and I really liked their ethos. And I read, Timothy May, and then I started reading some stuff, some of the things that came before Bitcoin. I learned about Nick Szabo, I learned about Hal Finney, and then I started learning about Rothbard and anarcho-capitalism, and I found that intriguing because I was studying at a Keynesian university, and a lot of the stuff I got taught, it felt kind of intuitively wrong and there was a certain ideology in that university, even though I enjoyed being in that university overall, but still. So then I decided to write my master's thesis about Bitcoin as money. And then I understood money is not just a medium of exchange. Money is also a store of value. I didn't actually, I have to be very honest, it took me 3 years of studying business and then another year of studying financial economics to then only through Bitcoin understand that Bitcoin is good money because it's a good store of value. because I had such a Keynesian mindset. I thought money is something that is used to buy goods and services, which is true. It's just one of the functions of money, but you only
I
want
forgot
to
the other
use
part.
money. Yeah, there's another part to it, right? If you
Yeah.
think about it, if there would be no law, we'd use the best money. And then I went into the real estate industry, which I grew up around. And then I started
Mhm.
working in the real estate industry, and it took me another couple of years to came to the conclusion that you came to. Took me 5, 6 years overall. I understood Bitcoin. If I look at the market cap of real estate, that is actually the potential of Bitcoin. And that really hit me. And I was like, wow, you could
Wow.
potentially store all the wealth in the world in Bitcoin, and you would be able to cross jurisdictions and borders with it, and even pass it on to your heirs without anybody knowing about it. I was like, wow. So then I started to develop these strategies because I also understood that Bitcoin most likely will mean competition for real estate, which is so excuse me, is so valuable because it is used as money.
That's incredible. What do you like? When do you think? What's your definition of hyper Bitcoinization? For instance, I always joke with everybody, and again, kind of not. It's not a real estate joke, but it's real estate related. So I'll know when we're in hyper Bitcoinization when residents are paying me back in Bitcoin. When they're paying their monthly rent, if they're paying in Bitcoin, that's when I know the business cycle is healed. We're in hyper Bitcoinization. What is hyper Bitcoinization to you?
Yeah, good question. I mean, if you think about hyperinflation is basically where the monetary supply is being increased so drastically at some point money has no value anymore. And hyper-Bitcoinization is the process where Bitcoin absorbs the monetary premium that
Mm-hmm.
other assets have accumulated in the fiat system and becomes the main form of money. I think that's how I would describe hyper-Bitcoinization. But now, if you ask me how I realistically see playing this out, very hard to say. But as we can observe, Bitcoin is absorbing more and more of the capital that is being, first of all, introduced into the world as new monetary supply. And there's also capital from other asset classes that now is being funneled into Bitcoin. And I think that's going to increase over time. Companies like MicroStrategy are inspiring other people to copy what they are doing, even though it's taking longer for other people to pick up on it. But I think so. Blankly saying the dollar will exist for another 50 years, and that is because what the US is doing now, they're acquiring Bitcoin. They call it a strategic reserve, but what they're actually doing is they're hedging their debt. So they're saying we want an asset that increases in purchasing power over time on par or faster than our debt, right? So they're not strengthening the dollar; they're actually inflating the dollar, but at the same time they're buying Bitcoin. So this will allow the dollar to exist for another 50 years maybe. And also Tether is helping the dollar to be used because it's providing digital rails for the dollar to be used worldwide. And therefore, I think a Bitcoin standard or hyper Bitcoinization is actually not really going to happen. I think what's going to happen is Bitcoin is going to become more important as a store of value over time. It's going to be more important as collateral over time. And at some point, it will be the most important asset class in the world. It most likely will dictate interest rates. It will dictate the investment environment because Bitcoin is a new benchmark. So owning Bitcoin means you don't need to invest into other assets to outperform inflation because Bitcoin increases in purchasing power more than other investments, even on leverage, as we showed at the beginning of our conversation. So I think that the investment world, interest rates, lending, credit will be changed, and also housing, because housing most likely will become affordable over time. As a mental exercise, look at any property in the world over time, price it at Bitcoin, it's losing value very fast, very, very fast. So in 2016, it cost around 1,000 Bitcoin to buy a home in the US. Now it's like 4 or 5,
I love,
should be
yeah.
4 or 5, depending on the market price, of course. And yeah, but so that helps to understand that Bitcoin is repricing everything. It's a unit of account. And I think that's the process we're going to see. I think
Mm-hmm.
fiat currencies will continue to exist alongside of Bitcoin, but Bitcoin is going to be this distinct variable that's going to determine market prices and lending and credit variables as well.
I love that you brought up that. I don't know who put it out. It was Bitcoin Mag or someone put out that, the infographic basically from 2016 to 2020 to 2024 with housing, the median price house. And it's just been making the rounds, obviously, on Bitcoin Twitter the last few months. But there's a reason it keeps kind of getting pushed around, because it's such an easy way to have anyone understand what's going on and how Bitcoin reprices everything. And is it a beautiful way to kind of show that. And it's funny too. I think of, it almost seems like, because I agree. I think that fiat currencies will be around much longer than we think. I feel like we'll live in two worlds in a way. Like, we've been talking about two worlds for a while. We might as well keep going with this theme a little bit. You're living in this fiat world, and you're living in this Bitcoin sound money world, where it almost feels like a lot of things we do, it'll be sound money or Bitcoin, but then you have government currencies, up here. They still want to hold on to that as long as they can. So they'll be operating in that world for as long as they possibly can, which probably makes the most sense just that way. Because I know my problem is I get too, optimistic, or I'm too idealistic. And I think that's a lot of Bitcoiners probably. We get very idealistic. And in our defense, it's, with, if people woke up tomorrow, or 10% or 20% of people, and said, hey, these fiat currencies are garbage, we're going to something better, we could do that. Like, we would switch. Now, logistically, would there be issues? Yeah, maybe, probably. We'd have to figure that out. But that's how quick it changes. But the realistic people, which I try to, gauge my my idealism with, okay, what's actually going to happen? I think what you just laid out is probably the most cogent explanation, at least in my eyes. So I think that's it's important to kind of see. But I think that's the hard part of what I'm trying to say with all this, though. It's really living in two worlds. I mean, whether it was real estate, what you've laid out already, living in different currencies. This is a world that, again, Americans at the end of the day are not used to doing this. And this is where I think a lot of Americans are going to start learning, hey, you're going to have to start living in multiple worlds at one time. And that's just not easy for the average American to understand yet, but they're going to start learning it. So.
Yeah. We'll have to operate within these two worlds, I think, for a while.
Mm-hmm.
And you're correct, especially working in real estate. You operate in both worlds. Obviously, Bitcoin is becoming more and more important, and it's also a very important skill set. So, in the past, a skill set you needed was investing, how to invest, how to outperform inflation. And the skill set you need now is, how do I buy and hold Bitcoin? That is the skill set you need now. So it's replacing the skill set that existed or was important basically for the past 100 years, really since 1913, when the Fed was founded. And then in 1913, 1914, the Bank of England went off the gold standard. And that's really the century of fiat. And you had to learn how to invest your money. Now you have to learn how to save again.
Yeah. Things really do come full circle. What I know we got about another 5 minutes or so here. I want to be cognizant of your time. What is there anything that's worrisome with you in Bitcoin? Is there something technologically, or is it something just ephemerally, just in the macro that worries? Is it people, human psychology? What's the one thing? I know Saylor, I think he's said a few years ago, the one thing that worries me is nothing technologically. I think everything is sound there. Like, we'll be fine. We'll fix stuff. If it breaks, like, we'll be fine. But it was, do people want sound money 50 years from now? Do people care about actually having this money that works for them? Like you said, one of the things that Orange Pill U is it's censorship resistant, it's permissionless, trustless. Do people care about that 50 years from now or 100 years from now? And I know, like he said, that's the one thing that kind of sticks with him, that it's his worry, I guess. But what is there anything that worries you when it comes to Bitcoin?
Yeah, I'll make. If you think about it, most people don't really want sound money even now, which is very worrying, because when I got into Bitcoin, I was hoping for more, I said, a bottom-up revolution, and now I understood most people, they don't care. It also was so frustrating to start off with, because they don't. I was telling everybody about Bitcoin.
So
People
true.
thought I'm crazy. I even know people that kind of few years ago, they stopped responding to messages because they thought that I've lost my mind, because I went so deep into this rabbit hole, and I just wanted to help. But maybe they'll circle back, or they won't. But it just made me realize it's not worth putting your energy into other people if they don't appreciate it. So it's more important to focus on ourselves. And I think there are a lot of individuals that do that, and they'll help make this Bitcoin revolution come true. And they are reaching out obviously to other peoples, and also conversations like this, content and education is very important. And one thing that worries me a little bit is if there are certain individuals that hold a lot of Bitcoin, they also have a certain influence on people's opinion, potentially also on the consensus. So going forward, I hope, and Bitcoin managed actually to remain tamper-proof and independent and centralized. But that is a little wary if there are certain companies, certain institutions, individuals that have a certain agenda, they could push it and influence other people that run nodes. So it's very important that we still run nodes, because as this Bitcoin journey progresses, the conversations also get more complex. First, it was, what is the problem? Why do we need a solution? Why is Bitcoin a good solution? What is Bitcoin? And now the question is, how do we apply Bitcoin? So we, for example, in this podcast, we talked about how do we apply Bitcoin to the real estate world. But sometimes I think it's important to go back to the basics. And one of the basics is if you can run a node. It took me a while to get accustomed to running a node because I come from finance. I'm not a developer, but I learned over time, and now I do. And I try to run multiple nodes in different geographical locations. And something I would like to suggest of you, also if you're a company that gets into Bitcoin because you want to use it as a treasury asset, maybe try to engage with the ethos of the asset as well. You can run a node, help the system to stay sovereign and decentralized.
I love that you said that.
And
I just
yeah,
no, go ahead.
no, that's it. And other than that, maybe it's a bit esoteric, but over time, I just learned to just kind of trust my intuition. My intuition tells me there's always risk, there's always a black swan event, there can always be a catastrophic failure or systematic issues. But something inside of me tells me we're on the right track. And rather than worrying what could happen, I think we should really embrace what we can, the change we can make, and like focus on that.
Yeah, that is so beautifully said. And I so one thing, like you went back to, orange pilling people and talking to people, and there were so many people that unfortunately don't have the eyes to see or ears to hear. They just shut down. They don't want to. They want to bury their head in the sand, and that for some reason just doesn't compute. I think with the modern Bitcoiner, and we don't get it. We're just, we're all built differently. Obviously, I'll never understand that, why you don't want to, learn and keep growing. But like you said, it's the intuition. Like God gave us 5 senses, but he also gave us 6 higher faculties: intuition, willpower, reason, imagination, memory. That sets us apart from animals. And like you said, having your gut, your intuition, we've had that like phased out of us over the last 100 years, 110 years, since, at least probably the central bank here in America and the central banks around the world, really for hundreds of years. So it's this Keynesian, Marxist, inflationary currency that they just keep peddling for a reason, right? To how they keep power. So, man, that's a whole nother rabbit hole to go down a different time, right there, Leon. That's for sure. And you mentioned BlackRock, or sorry, you mentioned other big entities having power. I was thinking of BlackRock actually before you even said this. I wanted to ask you one kind of final thing before you get your final thoughts, but running a node, just so like the easy things to do are easy not to do, and such a great thing. I was going to say Justin Nazaroff with Phoenix Ammunition. I just interviewed him recently, and he teaches he got nodes for all of his employees a few years ago. You can pay in Bitcoin to get his ammo from him. And just, really live in the ethos. So I think that's such a huge thing, because like you said, whether it's BlackRock coming in, because BlackRock is a huge real estate owner of real estate here in America. I'm not sure how much they do where you're at, if it's just here in America that they're doing real estate and picking up housing, but they own a ton of housing here. And that's why it is so important to run nodes, and because you're battling these huge entities, whether we know it or not, or whether we like it or not. So I think that cannot go unstated, and it's the simple things to do are simple not to do, and that's why it's so important. So it's a great reminder.
Mm-hmm. Yeah, no, totally. I agree. I mean, BlackRock. Whitney Webb has gone deep into the negative side effects of large institutions entering the Bitcoin space, and I think if you want to learn about that, you can read into that, and then you can decide basically how much of it you can really foresee, because you have to decide for yourself, I think. What future do you imagine? Is it more of a dystopian future, more of a utopian future? Because certain things we can't influence, but we can influence our own thinking. And I think what we think becomes reality in a way. I'm talking about our own reality. I'm not talking about the state of the world, because we can't change the state of the world. We can change our own existence and influence the world around us. And obviously, maybe there are frequencies where we also interconnected globally, consciously or physically. But I think that yes, BlackRock has the ability to obtain large amounts of Bitcoin very fast, and they can capture that value as well. And like I said, there are institutions potentially in the future that could exercise control by issuing a certain opinion, which could influence other people. So it's important that we are staying resistant to any institution. And if we think about the block wars, it was actually also
Mm-hmm.
plebs and node runners against large institutions. These
Yep.
institutions were formed from Bitcoin. They weren't fiat institutions, but they were the first big businesses and in Bitcoin, and they wanted to increase the block size. So now we have large fiat institutions, and potentially they also have a certain mindset. They are projecting on Bitcoin consciously and also
Yeah.
subconsciously, and we'll just maintain the network. We run our node and
Yep.
go our way.
That's it. No, that's it, Leon. Because I think people get, again, we this common theme of like living in two worlds. People conflate these things, and the network itself, running a node is so incredibly important. We do this, we protect the network, and the influential part is kind of what Saylor alluded to, what you just alluded to, where we've already seen, mass psychosis, right? In many ways, that's a whole nother subject we can go down on a different day. And Whitney, like you said, Whitney Webb has talked about this ad nauseum. The mass formation, mass psychosis, people being influenced in ways consciously or subconsciously is so important, because just because the network's running and hey, it's stable and logistically it's good and the technology is good, if all the humans are like, we changed our mind, excuse me, we changed our mind and we think that doing things, backwards is now the right idea again, then it doesn't matter. It doesn't matter what, so that to me is so incredibly important. It doesn't get talked near enough. So I'm glad you brought that up. It's this being persuaded by these outside forces or forces that might not have your best intention. That's the differentiator versus, oh, hey, the network's running or, running correctly or running the way we want to, big blocks, small blocks. It's the influence. It's the human it's the human part, it's a human system at the end of the day, truly. So
yeah,
man,
Bitcoin, it's a human system at the end of the day,
yes,
because the system is being run by humans. So we kind of have
yes,
to pay attention to our mental health, our physical health, not to be corrupted
so
and
well
stay
said.
on path. And then I think Bitcoin can also.
So beautiful. Any final thoughts here, Leon? And just, we've kind of had a wide ranging, this will have to spill over into 2025 with some different rabbit holes we can go down for sure. But any final thoughts in wrapping up this hour here?
Yeah, thank you for inviting me. I really enjoyed the conversation. Absolutely. And I like how we went into, different forms of possession or property, because it has to deal with also being a sovereign individual. Yes. And that's why Bitcoining and running a node and real estate are actually not too different if you see it from that lens. Because real estate investing in the fiat world was a way to obtain freedom, because people understood, that's how you can play the game. And now you can do it much better. You can actually exit the system. You don't have to play the game, you just leave the game. And then you can decide how you want to merge the new game with the existing game to make your life a little bit easier. And so I really enjoyed that. And for people that want to stay in touch, I have a newsletter that I mentioned. You can find it on leon.wankum.substack.com. And I share monthly pieces. The next one will be on how Bitcoin impacts housing, interest rates, lending, and credit, what we also briefly touched on. So I'm going to go into detail. And then next year in the summer, I should have a book ready. It's having the working title, nice. Digital Real Estate. So there I'm really going into why Bitcoin is disrupting the real estate market. I'm explaining how real estate developers and investors can deal with it and how they can leverage Bitcoin to their advantage. And then I talk about the social, economical changes that Bitcoin as a new variable, a new standard, a new benchmark, maybe, and potentially will bring about.
That is amazing. That is incredible. And I'll link to all that in the show notes below so people can go check all those things out. And we look forward to, in 2025, we'll have some rabbit holes to go down, talk about the book. That'll be amazing. So thank you. Thank you so much, Mr. Leon Wankum, for being a playable character in a sea of non-playable characters. Thank you, sir.
Thank you for having me.
If you like this interview with Leon Wankum, then you're going to love the one that we just did with Gary Cardone, one of the most based interviews I've seen in a long time. Check that one out here, talking about Bitcoin, freedom, being an American maxi, and much more. Go check that out here. Or the one we did with John Haar, where we talk about Bitcoin breaking all of your models. Go check that one out here. Come on. We'll see you in there. Check them out. You're going to love them. Let's go. Come on. Come on.